Hi, this is William on India's weekly market overview for the week ending April 1st. I am Rushit Sejpal, equity analyst at William O'Neill India. So this week started on a positive note. Nifty found support near its 200 DMA, the black line in the chart, and reclaimed its 50-day moving average, the red line. On Tuesday and Wednesday also, the indexes went higher. However, on Thursday, due to the monthly expiry, it traded in a volatile manner and closed a little on the lower side. But today, it was a very good day. It was an excellent start for the new financial year, and it was led by the banking and the utilities. The disclaimer over here is I'm also a Mumbai Indian fan. Okay, so if you look at the last year, so you can see this column over here. There was a very good return. So Nifty and Sensex gave almost 18 to 19% return, while the mid and small cap gave around 25 to 28% of return. If you look at the key sectorial indices, realty, IT, energy, and metals were some of the top gainers, right? The metals gave almost 61% return in the last financial years. The good part was that there was no index that gave the negative return that the last year. The bank nifty was a bit sluggish, just 9% return. Similarly, the financial service and FMCG was quite flat. So there was no major movement as far as the FMCG is concerned. In auto, there were some stock specific rallies like Tata Motor, but there was no clear direction in the autos as well for the last financial year. But the problem is not the last financial year. If you can see the last 6 months over here, just IT is up 3.6%, right? And the energy and metals, that is due to the Ukraine-Russia crisis, have been going up recently. Otherwise, all the indices as well as the sector indices closed lower, right? But the good part is the recovery that is in the last month. So if you can see last 1 month return, bearing auto, all of them have been given a positive return, right? So this is something, a good setup over here. Now, if we move ahead, so this is William O'Neill India's market condition report. So we track 25 developed market and 25 developing market. So if you look at the developed market indices, right? So on March 11, right, there were only 2 countries that were in a confirmed uptrend, right? So this green one is the confirmed uptrend, but the next week there were 17, and since last 2 weeks the number is 19, right? So almost 19 developed market are in a confirmed uptrend, right? Just one is in an uptrend under pressure, and the 4 is in a rally attempt. So these 4 also can be shifted to confirm uptrend once you see a follow through day, right? FTD, which is 1.5% or higher gain on a volume higher than previous session. So this is a good improvement in the developed market. Now, if you look at the 25 emerging market, right? So over here also on 11th March, right, only 9 countries were in a confirm uptrend, which has increased to 16 this week, right? So this is some very good progress. Only 6 are in uptrend under pressure, 1 in downtrend, and 2 in a rally attempt. So overall, if you see the global market, the current setup is quite decent, right? But the important thing is to hold these gains. Now, if we look at some of the key important updates, right? So today it came that the March GST collection was highest ever, right? 1.42 lakh of collection in March. So if you can see, last few collections also were very high, right? So last 4 to 5 collections were higher, right? And this trend is going to continue. It is expected that the GST collection can continue to increase on a month-on-month basis. So this is some strong indication for the economy. The other important update was the PVR IMAX merger. So this giant will now have more than 1,500 screens in India, right? And they are planning to add a lot of screens every month. So this has been something very positive in the entertainment industry. And the investors also were very happy because soon after this announcement, I think on Monday and Tuesday, the stock did really well. Now, if you look at the other important update, it was about the Axis Bank and the CitiBank merger, right? So Axis Bank purchased Citibank India's retail business for USD 1.6 billion, right? And after this acquisition, so you guys might be knowing that Citibank has a lot of focus on the credit card business. So with the this merger or this acquisition, right, the Axis Bank will be number 3 player in the credit card business in India. So now, looking forward, see, the crude oil has been under control after reaching a high of around 130, 140 per barrel. Okay, it is now around 100, 105. And also the commodity price have come a bit little lower. So we want these crude oil prices to remain a bit lower. Now, if you look technically, there has been a very good rally in the index, right? And now it is trading about all its key moving averages. Now, two things that we want, that is fun. One is the 50 DMA, right? That is the red line over here. See, it is trending lower. If you closely look, the red line is trending lower, right? We want 50 DMA to start trending higher. Then this is a very positive indication. So this is number one thing that we are looking for. The second thing is the additional follow through day. That is 1.5% gain on a higher volume. That is additional follow through day that we call, that strengthens the market. The third thing that we want is the green line that is over here to cross the 50 DMA. So this green line is 21 EMA, not DMA, it is EMA, right? And we want it to cross the 50-day moving average. So these three technical indicators will be very good for the market on the higher side. On the flip side, we need to track distribution. So the good part is the market is in a confirm uptrend since last 2 weeks, right? But the distribution day count is 0. So this is something positive. So the distribution count is when the index falls more than 0.2% on a volume higher than previous session, right? So this has not happened over the last 2 weeks. So this is positive. On the macro front, you need to look for the how RBI is coming up with the policy, right? Because RBI had estimated that the inflation would peak in February, right? But that has not happened. So now inflation might peak somewhere in April, May. We don't know how this war will go on and what will be the forecast in the crude oil prices, right? Because the higher crude oil prices will be directly impacting India's inflation. So it will be important to watch what RBI says on the interest rates, right? And that will be very crucial to watch, and what is their estimates of the inflation. So follow the rules, enjoy the weekends. Thank you very much.